All right, now we'll talk about chip stocks. They are on the rise today after Texas Instruments boosted its forecast after the bell yesterday. In fact, all 18 members of the Philadelphia Semiconductor Index are trading higher. You may know that as the SOX index. Let's bring in Zara Burton, who's been tracking the semis today. And Zara, it's not just TI's report, but also a number of analyst upgrades coming out as well.
Yeah, definitely some analyst upgrades, but you can't ignore TI's report. If a company as big as TI indicates that consumer demand for electronics is picking up, the semis are going to do well. So you're seeing a bunch of the semis outperform the broader market today. You have Broadcom, you have Marvell Technology, you have Qualcomm, you have ST Micro as well. All those stocks on the move higher. As far as TI is concerned, an analyst over at Amtech Broadpoint, he was also, or Broadpoint Amtech, I should say, he was also upgrading that stock from underperform to outperform, and he's basically saying that this company is going to do very well, much better than expected. In fact, they've been actually shipping below the rate of demand right now. He thinks that that is going to increase, so he's increasing the company's results for the full year, saying that they're going to come in higher on both the profit and on the revenue front.
Hey, Zara, TI's results could also mean that electronic device makers are starting to turn around here because obviously they're suppliers for those guys.
Exactly. Look at a stock like Nokia today. That's actually on the rise. That also, one analyst also saying that that company is going to come in better than expected, that its handset sales are increasing, that company's outlook improving. That's what this analyst is saying. TI, as I mentioned, is the biggest seller to Nokia, so that stock on the rise as well. Now, also, I want to look at some of the wholesale inventories data that came out, because what we're hearing from TI is somewhat consistent with what we're seeing in the wholesale inventories data. Yes, the headline number came in less than expected. It actually was reduced, and also inventories being drawn down in the technology and the electronic goods area. However, electronic goods increased in terms of sales. So if you have sales increasing, inventories are obviously going to be coming down, and that's a positive because it's consistent with what we're seeing. As inventories come down, a lot of these suppliers of handsets, they need chips to replenish those inventories. So very consistent with what you're seeing in that wholesale inventories data, and so bullish for the overall group. Back to you guys.
All right, thanks.